Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is qualitative characteristics of financial information. This topic it is in our conceptual framework, and by the way, we have a video about conceptual framework of accounting. The video is in our video description. So we are talking only about this topic here, qualitative characteristics of the financial information and with its constraints. So what do we have here? First of all, decision usefulness. We need an useful information. And how do we measure it? By relevance and faithful representation. What is relevance? Predicted value, confirmatory value, and materiality. Predicted value, for instance, we have a time series of sales revenue. This historical data, we must have the capacity to use it to predict our future sales revenue. So predicted value here, we are talking about budgets. We need to be able to create our budgets based in our historical data. Confirmatory value is the opposite, is the control. We have our budget, we have our actual numbers. We need to be able to compare this one. And then we have the confirmatory value when we are able to compare predicted value with the actual value. And the materiality. Okay, I have a sales revenue of 10 of $1. Does it worth to recognize it or not? Depend of the size of the company. If we are a very, very small company, yes. If we are a very large company such as Apple, it is not material. So we combine with a lot of other small sales and we record it only once, for instance. And the second one, useful representation, completeness. We cannot have black holes in our financial info. It must be complete. Neutrality. Oh, okay. I am from the accounting department, so I will manage my accounting info to show that the accounting department has very, very few costs. So I will allocate it to a lot of other departments. I am not neutral anymore. Free from error. Here we are talking about compliance with accounting standards. And it doesn't matter if we are talking about US GAAP standards or IFRS standards. It must be free from error. However, we also have four additional topics. Comparability, that is the consistency. I I need to be or it is very required or very desirable to have consistency. So I can compare my actual revenue with my previous revenue, my actual balance sheet with my previous balance sheet. That's why our uh, our SEC, and it is a standard in almost all of our countries. They mandate the company to publish at least 2 years to have this comparability. Verifiability, we are talking about auditing. Our financial info must be auditable. If auditors they are not able to do their job, we don't have a useful financial information. Timeliness. All of info, they are new sometimes and they are old. And when they are old, maybe they are not useful. We are in 2020. I want to show you now my balance sheet from 2001. Man, it is not the right time anymore. It is an old information. Understandability. That's why we have our names. We call it our assets. We call it our liabilities. So everybody know what we are talking about. So we are understandable. And we have a constraint here, the cost effectiveness. Benefits should exceed costs. It doesn't work to have a perfect accounting info. However, it is too expensive that the cost exceed the benefits. So we have a constraint here. We will never have the perfect info because the perfect info is expensive and really, really, really expensive, and it will exceed our benefits. Okay, guys, that's it. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Subscribe our channel. We have 3 new videos per week. Like this video, like our Facebook page, Accounting Hub by Dr. Scarping, and have a very nice day. And God bless you.